Mackenzie and others socialize the content with some of our other students as part of what is an Eagle Connect program. And we do this for various disciplines. Today, of course, being finance, but, more also a general business session as well. So I do record it, shared my screen. And we'll get going in just a second here. Okay, so Mackenzie, you want to lead us off here as we welcome our two very special guests, Steve Grossman and Beth Franzini. Being here. There's a lot going on in the world today and this week, and both of these gents have taken a lot of time out of their schedule. So we really, really do appreciate that.
Thank you both so much for coming. Class, just as a reminder, so part of the purpose of the Eagle Connect program, where we bring our guest speakers in, is that we want to put our best foot forward and have guests in. And this is your opportunity to connect with professionals who are actually out there doing the work that you might be interested in doing today. So you're going to get the opportunity to hear a little bit about their career, and you're also maybe going to be able to ask them some questions, like things that you're learning about in this class. You can ask them about a concept or an idea and how that kind of works for them and the work that they do. So you can see, I learned this in class. Professor Michelson has taught me so much. How are you as a professional doing these different things? So those are all types of things that you want to think about. They are here to connect with you all. They know me already. They know Professor Michelson, but they really want to know you. They want to help you achieve whatever your goals are in your profession. And so that's what this Eagle Connect program is all about. That's what we're very thankful to have you both here with us today. And so what we always do ask whenever we get started is just for our guests to introduce themselves. Tell us a little bit about you and the career trajectory that you've enjoyed and that brought you here to us.
All right. I'll give a high-level answer to that question, then we can dive into stuff just a bit. I'm Ben Franzini. I'm one of the owners of Bluegrass Distillers. We're a small craft distillery located in Lexington, Kentucky. We bought a farm about 15, 16 months ago in Midway, right next to the interstate. So we're going to be relocating out there over the next year. We actually just broke ground unofficially. We'll have a formal one, but we just broke ground like 2 weeks ago because we finally got all of our financing approved, which we can talk about. But basically, currently I'll go into the distillery more in detail, but what got me to that point was a very random course of events that occurred. I actually studied mechanical engineering at the University of Kentucky. I graduated, I got an engineer as a staff scientist at a large aerospace company, and we did risk assessment and modeling and simulation for the federal government and other entities. And I did that for about 10 years. During that time frame, I always wanted to do something entrepreneurial, but I never found the right fit. A lot of that, at that time in my life, I was looking like the tech industry. Then I moved back to Lexington with my wife. We started having kids, and I basically got into vacation rental, property management, investing, and I kept my job the whole time, by the way. But through that, I met a bunch of other people that were entrepreneurs. I always loved bourbon, and one of my entrepreneurial friends told me maybe 3.5 years ago, he'd been running Bluegrass Distillers for a while, and said, "Hey, I need help scaling this business. Would you be interested in helping me do that, and buying the company?" And I said, "Absolutely, I'd love to." I didn't really know what I was getting into at that point, but that basically set me on the path to where I am now, which is one of the owners. We've grown the business a lot. We've realized that in order to stay relevant and make the business work, we have to scale. We have to get to a level of scale where our cost of goods gets to a point that we can get levels of revenue, we need to be price competitive in the market. So I can talk more about that, but that's at a high level, what brought me here today. So I'm glad to be here.
Thank you, Ben.
Steve Grossman, I'm Managing Director with Berry Private Wealth Management. Used to be Hilliard Lyons, a rural-based wealth management company. And we merged with Robert Baird out of Milwaukee over 3 years ago. I started out of college, graduated from Auburn University, wanted to kind of get into a business that was willing to work hard. You could work limited to a cap by a particular salary. So I started with Hilliard in Nashville, developing my own practice, so to speak. And so the way it was structured at the time, I got paid basically $1,100 a month for the first 4 months I was in training, then it dropped off $112 a month. So after a year, I got no income other than what I was generating myself. And a lot of people found out that they didn't like that, so they kind of moved on. But that's how I started and built my practice there. And then was asked to move to Lexington in 1989 to take over and build out this Lexington market for Hilliard Lyons. In 2008, we sold to Hilliard Lyons was a privately held investment firm, employee owned. So we had probably 100 of us in ownership of the company. Ended up selling it to PNC Bank in Pittsburgh. And we were with them for about 10 years. And then with the help of Houchins Industry, we bought ourselves back. Houchins is out of Bowling Green, Kentucky. Is the country's largest ESOP. Has about 20,000 employees all over the country. So we bought ourselves back. We were there with them for 10 years and then decided that for us to continue this path we wanted to go, we had to find another firm to join. So we reached out to Robert Baird, who we've worked with for a long time, and joined them over 3 years ago. Again, privately held, employee owned. They're much bigger than Hilliard, so about 4,500 employees. We're in the United States, Europe, and Asia. And we basically have 5 components to our business. Half of our revenue comes from the private wealth management side, which is what I work with individual corporations, various wealth management issues, investment counseling, financial planning, trust, estate planning, things like that. And then we have our asset management business. We have our private equity. We have what they call capital, or fixed income and equity capital markets business as well. So they're basically 5 components to our organization. One of the things that made the merger with Baird attractive from Baird is they didn't have a trust company. And we've had a trust company out of Louisville since 1982. Manages currently about $18 billion. Most of those trust assets are within our original footprint. Just this past September, we kind of opened it up to all the Baird advisors. So there's about 1,400 advisors in total with Baird. We represented about 350 of that. So we just started that, and that's part of our private wealth management business. So that's kind of it in a nutshell.
Yeah, no, that's great. And as we continue to build a finance program here, this is a corporate finance class. Most of the people here. The rest of the curriculum, I like to think about it as 2 broad areas of the finance program, that corporate side and the investment side. So we're really, really lucky to have senior people, successful people that have navigated both of those sides of finance. We have your bios. So we create a landing page for our presentation today. So the students would have seen your bios and know a little bit about you. But maybe I could ask, and I could start with you, Steve, if you don't mind. On a day-to-day basis, what do you wake up and do?
I look to see what the futures are.
Mm-hmm. And you mean the financial markets that the students would know a lot about? Yeah.
I kind of manage our operations here. We have 40 advisors, total staff of about 67 people, and they have their own business within our company as well. So I'm there to help them. But I have my own practice, work with individuals, foundations, other institutions on the investment management side. We also do a lot of financial planning, but most of the day is spending talking with clients and just normal course business and continue to try to develop business.
Mhm.
You had, Ben's got his thing. We have, as I mentioned, Baird Capital is our investment banking arm, which works with companies like him. We're trying to raise capital. There's a lot of different ways that you do that.
Mm-hmm. And what are your clients, the students? We've looked at this CNBC page every day. We know there's been more red on the screen than green. So what are they telling your clients these days?
The question is, what are we telling them?
Well, better phrase.
Well, you know, the thing that, it's almost a curse to have the liquidity in the equity markets. You know, you can buy or sell a company at any time. And they fluctuate. And it's interesting that fluctuates. A lot of people can't handle it, but if you look at ownership as a business, for example, whether it's Microsoft, whether it's Google, whether it's General Electric, what we want to do, and our philosophy is we want to really find business. And much of our market cap portfolio is about 27 different companies. And we've owned them for decades. For example, Home Depot, we've had that for 25 years. And we get more dividend income off the shares than the actual original shares cost.
Mhm.
Because companies grow and shareholders benefit from that through appreciation of the shares, plus what they send back to the owners in the form of dividend income. Or a lot of companies, we have a company, O'Reilly Auto Parts, which is an incredible business. And they don't pay a dividend, but they have massive share buybacks, so they reduce the number of shares outstanding, which in effect make your shares more valuable.
Mhm. And large cap, the students would know, means large market capitalization companies that we've looked at all the time. Many of them are reporting this week, and even Apple, I think, is tonight. It's been a wild time, which is another chance to thank Steve for taking time out on a crazy week.
Well, you know, for example, when you look at, like I said, we don't really sell complete positions very often, but what we do is kind of trim positions. I mentioned O'Reilly. It hit an all-time high yesterday. It's at $32 a share today. And so we will trim that. In other words, we trim basically 1% off of O'Reilly, or we trim 1% off of Progressive Insurance, which we've done for a long time. And we took those proceeds and bought a company called Parker Hannifin, which we think is a really fine company. We look for companies that we can buy at below their intrinsic value. And the reason we were trimming off of O'Reilly and Progressive is they've kind of gotten above what we feel like their intrinsic value. So we're just kind of trimming those positions, but that's how we kind of mitigate some of the volatility.
Yeah, so here's O'Reilly on the screen, Steve, and I tell you, there's not too many charts that look like that this year. $50 billion market cap company, and you're speaking our language, right? So the students have heard Warren Buffett talk about just buying real companies that generate cash flow, irrespective of maybe what the stock market's telling you. And then you pivoted to what stock, if you don't mind?
But I said, well, we
oh, Parker Hannifin.
We trimmed some of the Progressive.
Yeah.
We'll pull that chart up. PGR.
There's Progressive. It's an insurance company.
Yep.
We know their ads probably, right? And how big is this company? $73 billion company. Substantial, not as big as the $1 trillion guys, but it's a huge company. What's the story there?
So one of the insurance business is a well-run, it's an interesting industry, but that's a well-run company.
Yeah.
And so we took some of the proceeds off of that and bought Parker Hannifin.
Yeah, I know that one well. I used to follow that company very closely.
That was actually a new position for us.
Yeah. And again, Steve's doing this on behalf of his primarily high net worth individual clients. Is that fair to say? Or your clients are?
You know, ideally, we all love to have 10 million above clients. But you don't see that many in Lexington, Kentucky, or Tennessee, Chicago, New York. But, you know, we're more middle markets. We do our family wealth group. We can handle 20 to several billionaires that are in that group. So we can handle about anything. But our crux is working with that middle market.
Yeah. And Steve and his group that he's built would take a fee for doing that service for these clients. And it's a fantastic business that scales if the you know, particularly as you're gathering assets and the market's going up. This is a company I knew well back in the day, Steve Parker. We'll geek out on this a little bit later, but I've noticed none of these are big technology stocks you've talked about yet. So we'll talk about that. Maybe move to Ben and ask the same question about now you have a very different job, and I know you wear a million hats at Bluegrass Distillers and even at another company. So maybe this is a good time on our landing page, Mackenzie. Ben was kind enough to send us a PowerPoint, which if I can download it, I'm going to open up. Is this a decent time to talk about that? And he's even got visual. There was some discussion of a tasting here, but we got overruled. There's an after presentation. Let's call it. But so Ben, thank you for bringing this. If you don't mind, I'll just do your slideshow.
Yeah. So in terms of my day-to-day, so I still have still working as an engineer, as a cybersecurity, but on the distillery side, it's nights and weekends. We have a team of people, which I'll introduce, to do the lion's share of the work. I'm just helping try to direct that work in the most optimal way. But a lot of what I do actually is he's talking about the way he's looking at companies from the top down, you know, to invest in the market. We're looking internally at our company data to try to make decisions about what we're investing in, where our employees are spending their times on, you know, how we're allocating sort of our internal company resources, similar to the way you would manage I mean, it's my investment in my company, similar to like the way you would be invested in lots of companies. And so that really is like, as I see, you know, I used to look at my own stock portfolio all the time. I don't look at it as much because I'm looking more now at my own company, just because I'm so head down in it. But again, it's sort of like thinking about, all right, here's our payroll, here's our, you know, overhead costs, here's what we have left over for marketing and product development and new investments. Like, what are we going to invest in? Like, out of all the options we have, out of marketing, out of new product development, out of upgrading equipment, where are we going to invest our money, invest people's times? And so a lot of Sam, my partner, and I's time is spent talking about, and it's not, and the other thing I'll say is our investments a lot of times are not like we have excess capital and we're trying to deploy it. We're in growth mode, so a lot of it's existential. We're trying to figure out, how do we keep going? How do we keep building this company so that, you know, we can have payroll and we can keep money flowing to invest back in the company. So, so my day-to-day as an owner is spent on a lot of that stuff, but also on a lot of miscellaneous stuff. So yeah, this is our current distillery in downtown Lexington. It's about a 4,000 square foot warehouse. We have 2 pot stills. It was the oldest one's about 10 years old this year. We were founded in 2012, and that's when we bought that first pot still. But basically, out of those 2 pot stills, which are 250 gallons each, we can produce about 1 barrel of bourbon a day on average. So we have, you know, 4 full-time distillers that are working basically 3 shifts a day, 7 days. We don't do 3 shifts on the weekends, but we're trying to get as much as we can out of this facility, which is about 1 barrel a day. So here, what we're doing is we're bringing in grain, we're cooking it, we're fermenting it, we're distilling it, we're doing tours, which if you're over 21, you can come and take a tour if you to come by. We also have a small room where we store about 40 barrels, which is a small percentage of our total barrels. The other barrels we have, we rent some space down in Danville, Kentucky. But so basically, yeah, so within that space, actually, that's a good transition. This is sort of the process that's going on, you know, and at the highest level, distilling is a fairly simple process at the highest level, which is where you cook your grain, you add your yeast, it ferments, you distill off the alcohol, and then you barrel it and let it age. But within each of these pieces, there's like 1,000 optimization problems or decisions about, all right, do we upgrade this? What data are we tracking to determine if we're running at highest efficiency, getting the most proof gallons out of each mash? So that's sort of the other thing that we're doing is we're looking as in a prioritized way about how we can improve the process at our current location. While at the same time planning to like build this new facility in Midway, which the new Midway location, perfect transition. You're on point, Mike. Thank you. So it's basically right there at the I-64 Georgetown Road quadrant on the northwest corner. And it's a 62-acre farm. We're going to build a new distillery and barrel warehouse. We're going to renovate the old house that's there. It's called Elkwood Farm, and the house was built in 1835. And that will be the tasting room, visitor center. We'll have events you can do there. But the new distillery capacity will basically be increasing 2 orders of magnitude. So where we have the capacity now to make 1 barrel a day, we're basically changing technology to what's called a column still, which is the big one. If you've been to in most distilleries, it's not a pot still like we have, it's a column, which is like a 30-foot tall, cylindrical, solid rocket booster looking thing. But it will basically be capable of producing 130 barrels a day if we were ever able to achieve that level of capacity, which would require, all the supply chain to work to support that, all the finances to work to support that, and all the staff to work to support that. But that gives you an idea, like, while we're trying to get the most out of our current business and, basically system, we've laid the groundwork for this upgrade, which is really a pivotal shift for our company in terms of just what we can do, what we need to plan for in terms of supply chain and also sales and aging and all that stuff. So that's this piece is what I've been focused on. And yeah, you can go to that next one. So in the interim, we do have, Sam and I are the owners. There's Sam Rock, my partner, and then we have basically 10 employees that are full-time now, and we have a handful of other people that are part-time tour guides. But we have sort of all the primary functions fulfilled. We have marketing, our production team, which includes both the distillation side and then the maturation, tracking, the secondary barrel aging, the blending, and the bottling. That's all part of production. Which, by the way, just for perspective, all these people, sales, hospitality, accounts payable, when we bottle, just to give you an idea about our size company, everybody bottles. Like, it's not like this, like, okay, get the bottling team, get the bottling operations going. Like, everyone is there, myself included, like putting labels on, corking bottles, because we will have a bottling machine, but we don't yet. But just to give you an idea of the scale and what sort of a small business looks like, because you are forced to wear many hats, just out of necessity, because you don't have enough people to where people can specialize in one thing and only one thing. Like, actually, Maggie, our marketing, I call marketing here, she's really one of our product designers, almost like an operations lead. Like, she manages, as Tim well knows, because she's like she runs a lot of the day-to-day and staffing, and so it's like, and she's sort of worked her way into that. Even though she started with a marketing degree giving tours, she's now really, an expert in everything we do, because we're a small company and she's had to pitch in. So while Sam and I are focusing on like sort of the higher level business stuff and trying to improve, like, how we do tasting panels, how we do blending, all these aspects of the distillery, the team here are really the people doing the work, the day-to-day work, making, delicious bourbon. So I give them a ton of credit. And, if you come in for a tour, you'll sort of get to see the constraint we're working in and how basically when we bottle, we reorganize our barrel room, we reorganize, like, because we just have so limited space, but we make it work. But it is a constant like puzzle. I call it optimization problem, but it's really just like, how can we get this done today with what we have? So, and there are, sort of our line of mash bills. We have 3 primary mash bills. Actually, go back one on each of the 3 primary mash bills under Bluegrass Distillers. They're all 75% corn, 21% secondary grain, either rye, 4% malted barley. And then we have a high rye and a wheated, which is actually one of the bottom bonds I hear makes our rye whiskey. And then we have a blue corn, which is a unique mash bill where we actually use blue corn instead of yellow corn for the 75% corn portion of that mash bill. So those are sort of our flagship products. in addition, so up until a year and a half ago, and this just goes into like sort of the things you have to confront as a business. We've been distilling at this level. We realized that, okay, what we distilled 4 years ago is not going to meet our sales demand. Like basically we're selling more than we made 4 years ago, so we don't have product on the shelf. So we started sourcing bourbon to create some other lines. One of those lines was the Toasted Oak, which is essentially where we take sourced bourbon, which means we're buying barrels of bourbon from other distilleries, and we're putting our own taste, our own spin on it. In this case, we put it into a brand new Toasted Oak barrel, leave it for about 40 days, and it adds a beautiful layer of caramel and vanilla and a lot of the wood flavored notes that you get. In addition, again, sort of like based on what's available on the supply side of the business, we started sourcing some MGP rye whiskey. Miller MGP is a big, huge distillery. It used to be Seagram's in Indiana. And so we started this line as part of moving to Midway. We resurrected this old brand called Midway Distilling Company, and we do a lot of secondarily aged rye whiskeys. And we did it in two parts. One was because we needed more product to have to sell. The second one is that we knew we could get bourbon. And that goes into the supply chain side of the discussion, which maybe we'll touch on later, which is a constant balancing act. But so that.
Yeah, no, beautiful. And this community is very, very lucky to have bluegrass distillers come to not just the county, but the town. I've been privileged from my kind of vantage point with the EDA to see a lot of what the management team has had to navigate in the last really 2 years, Ben. So my hat's off to you. It's just incredible. And you're both just described an investment decision that you've made, whether it's a position in Parker Hannifin or buying a new pot still. So we teach that differently in this corporate finance class than I do in the investments class, but the principles are the same. And we use the same word over and over again this semester, which is inflation, and higher interest rates. So maybe, Steve, if you don't mind talking, how has inflation affected your clients' portfolios? How has inflation affected some of the companies you've been looking at, studying?
Well, inflation is created in one place, and that's in Washington, D.C. And what you've seen with the advent of inflation and inflation is just too much money out there chasing too few goods. In other words, if they just had those two bottles and everybody wanted one, he could probably had a pretty good price for it. But what you see when you have inflation causes interest rates to go up. You can see the Federal Reserve has just increased the rates again 75 basis points, which is 0.75 percentage points. It's had to take money out of the system. We've had the spending that has been going on, there's probably 40 times the amount of money out there than typically. It's going to take like 4 or 5 years to work through the system. But what they're trying to do is kind of put the brakes on, and all of a sudden interest rates go up. If you have lines of credit, you're running a business, all of a sudden you see it go from basically nothing to probably 5 or 6, 7% now, which just is additional money that comes out of your cash flow, which is especially for a small business, it's a huge component. So we like to say that we own really great businesses, great managers. They know how to deploy capital, and they can operate and manage their business through really any kind of environment. So, but it does take a little bit of hit on the valuations because of, the cost of capital goes up. And valuations typically on most anything, your houses, things like that, as a function of rising interest rates will increase.
Yeah, Steve, we use primarily as our proxy for interest rates the 10-year, which this is the yield here, and it's gone from below 1% to almost, well, it got over 4%. It's backed up a little bit, and we track inflation numbers very closely. But can you help the students understand where there's been certainly? We know that this is a strong headwind for companies, and by extension, their equity, their stock. But what's it done to the bond market as well? And so there hasn't been a lot of places for clients to hide this.
That's correct. When you have zero rate interest rate climate, bonds or debts. In other words, you have government issued treasuries, debt, treasury bills, treasury notes, treasury bonds. Corporations issue debt the form of bonds as well. In other words, that you'll buy a $10,000 bond, and that company will pay you a certain state interest rate that matures at a particular time. So bond prices are a function of what the current interest rates are relative to what you purchased the bond for. For example, when I started back in the early 80s, you had interest rates, money market accounts at 20-21%. I mean, it was huge. And so, as an example, if you had a bond that you paid 100 cents on the dollar for, and it has a 5% coupon or interest rate, and all of a sudden interest rates go up to 10% on a bond that has that same maturity, that makes the value of your bond drop by 50% because it has to be equal to what the current yield is for that particular bond at that particular time. So you have that volatility. However, at the maturity date, they will pay you what you put in. But you do have that volatility.
Yeah, and this is a long, it just puts this in perspective. This is a long-term chart of a 10-year back to the period that you were talking about, which, you know, it's really on an historical basis, this increase feels
It's
significant. It is, but, you know, back in the late 70s, early 80s, and we know that the students would know that's when the CPI was, you know, 15%, not, and then Fed funds rate was 20%, and not the smaller numbers today. But that's unbelievable, and we know how difficult a period of time that was for investors.
Yeah. And you look at the rising interest rates up here, you think it was, but inflation was higher, like it is today. You may have what's 10 years you say?
Well, just under 4%.
4%, okay. And we got inflation 8.5%, so you're actually losing basically 4% annually in your purchasing power.
Yeah, fascinating. No, it's amazing. And Ben, you deal with inflation in a very different way, or not different, and in fact, but a more direct way in terms of what's happened to the cost of the pot still that you just bought. And I happen to know because I've seen that. But yeah.
Well, yeah. So we, as part of this new distillery development project, we basically started it, as I think I mentioned, a year and a half ago. We had to go through a lot of approval processes, partially because the property is on the National Historic Register. But because of that, we basically got our distillery quotes, budgets, everything about a year and a quarter ago. You know, and I basically built like a forecast for our 10-year business forecast, which is what you need for the banks to give you money, which is what the route we went down, traditional financing. And as part of that, you know, I had to put in interest rates that I think we could get for our loans. At the time, based on, you know, what it was at that time. And then over the course of a year, while we've gone through this process, things have changed dramatically, both from you know, the rates we could get money for, but also on the vendor side. Well, they fluctuated all over the place, but a lot of them they've gone up, they've gone down, they've gone up, they've gone back down again, and then they've gone back, so there's just been a lot of volatility because for our vendors, which are people that are making stills out of copper and, you know, different metals, their commodity prices change so much. So their cost of goods to make that still or to make that fermentation tank has, in some cases, or to build our distillery, our warehouse, has in some cases gone up 75%. So then our budget has to go up accordingly, and, you know, at the same time, the rates are going up. So from our side, like in terms of a cash position, free cash flow model, it's hurt a lot. You know, we, because those, you know, rate changes essentially change our debt service number every month, which means we have less money to invest in marketing or in product development because we're paying for the debt, we're paying a higher interest rate. So it does, and for us, it decreases the amount of money we had to invest in either new fill barrels, like putting more bourbon away, or invest in marketing or advertising or new employees. So it's definitely it's changed our outlook. At the same time, we've learned a ton about the industry, and we've enhanced diversified some of our revenue streams. So we've luckily sort of evolved with the rates and still feel confident. But yeah, I mean, I wish we could go back in time and get, you know, lock our rates in a year and a half ago. But, you know, that's not the case. So, but the thing is, you know, all of our upstream suppliers are saying the same thing. Like people that are buying, you know, 2 years worth of barrel staves, they're having to pay more money to keep those staves seasoning at the cooperage. So then that barrel ends up costing more money. It's just all those kind of things trickle down. And then at the end of the day, we've had to raise the price of our bottles because everything upstream of that has gone up. So then you as the consumer have to pay more on the shelf for a bottle of bourbon. And it's not because we're making more profit margin. We're probably have decreased our profit margin, but it's just that all of our suppliers have had to increase to either pay for their debt financing, to pay for the materials that they need to make their product. But it all just flows down to basically a consumer to make things more expensive for you. So it's a huge domino effect.
No, and the thing is, when you have a contraction in the economy, you move into a recession, things slow down. The first thing that the business owners cut is the market. And for spirits, I mean, it's all about market.
Yeah.
So, but it's about surviving too.
Right.
Yeah. So we had in the class, the students will remember our chief financial person come in and talk about inflationary trends. You remember what food prices were doing? How much did she say it was going up by? 11. So our cafeteria costs, Aisha's got a good memory, 11%, right? And other thing. So what's happening to grain and corn? I know you're growing some. What's happening to wood for the cooperage prices, and how would you quantify it? Or
Yeah, so on the grain, so like the yellow corn we buy is sort of a commodity, so that rate, that has gone up, and with all the costs of probably the farmers financing for their equipment, so those have gone up. One thing we're considering doing, because we're not sure what the future holds, maybe you guys can help tell me, is you can lock in grain prices a year in advance, and basically pay for next year's production. So we're considering doing that as sort of a hedge against inflation continuing at the rate it is. But things like that are considerations we look into. And again, we like the blue corn, we're growing ourselves to help control that cost, because we realized, okay, we used to not be able to grow it below what we could buy it for, but now we can grow it for below what we could buy it for, because the commodity, the price has just gone up so much from suppliers. So and then the other interesting thing that I'll just comment on, like on the barrel side, for instance, like there's also some microeconomic forces at play in any industry. Like for us, all the big distilleries are growing like crazy and investing like crazy, which means they're consuming more of the supplies for our industry. So for us, even the pricing has gone up, even the sourcing is becoming more difficult for certain things. So it has like it shows its face in many different ways in terms of us being able to get stuff we need to make for it. So
yeah, fascinating. All right, let's pause for a minute. What kind of questions do we have for our guests at this point?
Question for Ben. So what is the biggest bottleneck then at this point? So with opening up this new distillery, is it your like just looking to be able to house more employees, or like what is the biggest bottleneck?
It's changed a couple times. And what I mean by that is, initially it was, as we've worked our way to where we are now, initially it was like finding the property. I mean, it's difficult to find industrial land in a sense. Then it was, okay, how are we going to finance it? And my bottleneck, I'm interpreting like, what's your biggest hurdle at any given moment? Now that we've sort of got the financing lined up, it's really going to be our learning curve with our new equipment and getting that operational enough to full capacity as soon as we can. And the flip side of that is then selling enough to fund the operation of that equipment. So, but I do think the bottleneck, it'll be on the supply side, it's probably barrels, it's probably wood. I mean, that's become just, as I mentioned, like distilleries growing so quickly all over the state, it has to be a new charter oak barrel. So therefore the bottleneck on the supply side becomes cooperage, because they were scaled to supply the distillery industry of X size. That X is almost double, or planning to double in the next couple of years. So the barrel supply is the biggest bottleneck from the supply side. When I think about our own business, like what we control, a lot of it is sort of, our staff's capabilities, training. And I feel like that will unlock our capability to utilize our capacity. But on the supply side, it really is. And we're having to figure out, alternatives or pay more to basically get past those bottlenecks on the supply side.
All right, questions?
Why don't you invest in tech companies? Like
We did. On Google, Microsoft, Cisco.
what
What
about Apple? Like,
Yeah, Apple's probably one of our largest holdings. And so what we try to manage our portfolio to mitigate risk. We've had 25-year track record. We've outperformed the S&P 500 over 1, 3, 5, 10, 15, 20, 25-year period with a beta of 0.87 historically, which is less volatility in the market. But we have a position that gets over 8% of the portfolio. We will trend it back. Try to time down somewhat, but that's what we did with Progressive and O'Reilly as well.
Mm-hmm.
So we own tech, but it's really more of it's a balanced portfolio, but it's more value oriented than growth oriented. And you're seeing now probably a movement into more of a value oriented market through probably the next several years.
Mm-hmm. Ryan happens to be in my valuation class, so he understands that distinction between a value company, which, might be a cheaper company in the market, but valued at a lower, say, multiple of earnings, and a growth company like.
We own quite a bit of financials as well, JP Morgan,
Mm-hmm.
this bank. One of the things, like for us at the area, like a lot of financial companies, money market accounts, which were paying zero. So we couldn't charge anything for that because there was no interest. And so we could kind of waive the fee. Now you have those money market accounts that are paying close to 3%, and we're able to charge for that again. To put that in perspective with there, and look, because that's more on the private wealth side, our runway going forward, just on the money market fee, is about $240 million a year. And there's no payout to anybody, so it goes straight to the bottom line. So we might have a drop in valuation on the, because we manage assets on a fee basis. It's based on asset value. So you might have had a drop there. But at that particular run rate, last year, our private wealth had the largest profitability. It was like $340 million. So that puts it in perspective. That's a big number.
Mm-hmm. Mm-hmm. Brilliant. Any questions for, any other questions? Go ahead, Lucas.
both of you guys, but if someone probably graduate and go into your 2 fields, what would they start to do? What's your advice for them to start doing? Like after they graduate?
Well, I think it's easier to get started in mine because more sweat equity. Well, the way we work it at Bayer, you can come in 2 ways. You can come in part of an existing advisory group, or we have our Bayer Foundation program, which is a 2-year program. You pay a salary while you're in that 2-year period. You're working with several different practices, but you're getting your CFP, you're getting all your licenses, and the goal is after you finish that 2 year, then you go on to a team.
Mm-hmm.
Yeah, on the distillery side, one thing I do love about the distilling industry is it touches on almost every discipline in one way or another, because you're doing everything from harvesting, growing grain, harvesting it. So there's agricultural, disciplines, and to processing it, which goes into distilling, manufacturing, to marketing, product development, and then once you have that product, to then hospitality, to tourism. It covers the gamut of disciplines. So depending what your background is or what you're interested in, you can sort of dig into each one of those, because within a distillery, you're doing all of it, because you're basically doing everything from the grain to glass, and you're getting consumers drinking it potentially at dinner. So it could be, that's not a great question. True, but it's true because it does cover the gamut of sort of disciplines.
You're having to, in case Bennett has a business here, it takes capital to get started. And sourcing that capital is, and if he gets basic conventional financing, is really good because a lot of the startup companies have to maybe go to mezzanine level type borrowing. But the younger you are and you have to go out and go to the well, so to speak, the cost of your capital goes up. So if you can get traditional financing, that works out well because he may say, okay, we're gonna lend you this money, but we won't have your company.
That's right. Yeah, so on that, yeah, in terms of like investing in this source, so that's a great point. And, you know, one reason we were able to secure traditional bank financing, which means they're giving us money at an interest rate without taking any of our company. They obviously have collateral if we don't pay, but they're not taking an equity share in the company. So because we had the history, even though we were a smaller company, we had the balance sheets, we had the P&Ls, we had all the artifacts required to give them confidence that we knew what we were doing. And also unlike maybe the VC investment, we have infrastructure that they can keep as collateral. So like they have land, they have buildings that if we don't pay, they can pay. So like, yeah. So another startup that may be in a more like tech space, there's no asset if that company evaporates. You know, you've got a bunch of code somewhere, but you can't resell that. So they're taking a lot higher risk, which means they're going to ask for a higher rate of return because they're taking more risk. So so from if you want to start a distillery, just work at it for 10 years and then get some financing and have to give up your company.
So I mentioned again, ever heard of Bullet Bourbon? Okay. Tom Bullet started, he's from here. Similar thing, he started sourcing his bourbon. He had it packaged in a bottle, and so he's growing his business, but cash flow was a big deal. And he didn't have his own distillery, didn't have those assets, so he ended up selling his company to Seagram's. And it made a little bit of money off it, but it wasn't a significant amount. And so then Seagram's sold it to Diageo. And Diageo came in completely repackaged, and the Frontier look to it. And then it's just taken off. But Tom, you know, he had to give up basically ownership of the company, but his deal was his compensation was based on future sales of the bourbon. And so, I mean, they've been killing it, you know, from his standpoint. But a lot of times you may have to give up some of the ownership to get the capital, but in the end, it can be very beneficial because you still have ownership, you get options. And a perfect example was Bob Trussell and Tempur-Pedic. You know, they had to give up quite a bit of ownership, but in the end, when they went public, it worked out well for them.
And in some cases, you can have a very strong relationship with the county's economic development authority.
That's right.
Structure a very efficient piece of finance.
That's right. I will add.
So,
So, so in addition to bank financing, we have also secured a grant through the community development block grant program. That's how Michael and I met. Midway's EDA sort of really coached us through the whole process, but because we're creating jobs, we were able to get a federal grant to basically pay for some of our equipment through a capitalized lease, which I think the purchase order just went in this morning.
I know.
So,
yeah, we have our meeting tomorrow, so
Okay.
we're happy to
be
talking about
in
that.
addition to these types of venture capital, traditional financing, there are a lot of grant programs that are worth looking into, you know, depending on the type of business you're in. But on that note, in terms of things that are beneficial, because it is like, so Tim Diddle and the three people in your room here that are professors, like for me, from a bourbon, I'm a newbie. I mean, Tim, I was fanboying over Tim throughout the pandemic, watching him every day on Instagram. And so I say all this just to say that like the people that you all have at your fingertips here to talk about industry stuff with, you know, ask about their side job or their other jobs or the other things they're involved with. Because like, you know, it's a lot of times that's when people light up and you start to make connections that are interesting beyond just like the theoretical classwork, which is critical, but like when you talk to people about the other businesses they're working on, it's unbelievable. I mean, you know, and I feel like there are a lot of people maybe that are, you know, wear many hats, you know, in their own lives in terms of their career. And sometimes talking about some of their other hats leads to interesting opportunities. But I think I forget exactly the block grant, but it may have just been we met and then you guys mentioned it and we started pursuing it.
Yeah, it was a new program for the EDA and Steve, and for everybody's benefit. That money is this is public information. That money, it's a lot of money, comes into the city and then through the EDA. And then as the lease gets paid back, secured against equipment, and as the lease gets paid back, it goes back to our balance sheet with which we can do productive things. It doesn't go back to the state. We can use it to help other businesses and other programs. So it's a very virtuous thing that the state does, really. And this is why I've had that, you know, privilege of watching you guys navigate so brilliantly through a lot of challenges. Yeah, but that's how we met. That's right.
Yeah.
And Sam. Yeah, that's right. Well, that was I think that was a great question, Lucas. It's getting me on if it's all right. If we've got another, can we keep you another 10, 15 minutes? Is that all right? So Lucas's question about career paths. Would you both mind putting yourself in the seats of the students, taking us back to when you were in this phase of their development, phase of their career? Talk about some of the skills that you've honed over the years. What's important as far as how you've navigated. And I know you both have fascinating backgrounds. Steve, I think you might know this, but well more than half of who plays a sport here in this? Almost everybody. Steve was a college tennis player at Auburn. He's also an equine enthusiast. Unbelievable background. Ben's background is an engineering background, even touching high technology things like aerospace. So put yourself, if you don't mind, maybe Ben, in the seat, and how did you navigate a career from there?
Yeah, so, you know, I remember when I was a little kid, I asked my grandpa, because he was a professor of engineering, and I was like, I thought he was, man, he's got to figured out. It's like, how did you know this is what you wanted to do? And he's like, I didn't. He's like, I just sort of like navigated, you know, until I got to a decision point, and I'd make the best decision I could, and then move forward, and, you know, you sort of end up where you end up. But, you know, as a college, and I remember sitting in class and being like, what do I want to do when I grow up? What do I want? What's my dream, you know, profession? And, you know, I think that's good to set with the North Star of what you're going to do. But I also think it's important, and things that when I look back, I get the perspective on it, just like talking to people in your network, you know, like your professors, your parents' friends, your friends, about things they're doing, things they're interested in, because there's just so much out there that it's not boiled down to one of those life cards where it's like the 5 jobs you can do when you grow up. There's like so many different types of jobs within every industry that, even like to your question about what's this work in the distilling industry look like, you can be in distilling and be an accountant, you know? So it's like, and you can have a passion for distilling and, you know, fulfill that passion through working as an accountant at a distillery. So anyway, when I think about my own career, it was very like sort of seems random in retrospect, but at the end of the day, I look back and I'm like, I was just talking to people that I liked about things they were working on, projects they were working on, jobs they had, companies they had, and that led to opportunities, you know, with respect to like what I'm going to do next, you know, and so in general, I think the thing you can do, and it's, you know, people talk about networking, but really what that means is just talking to people, asking them questions, listening to their responses, like really listening, saying like the questions today, like what do you do? What do you do on a day-to-day basis? Like, and you know, and then remembering that and maybe reaching out to them later and say, hey, you know, do you have any thoughts in this area? I'm interested in this, because you know, you guys have the internet at your fingertips and tons of data that like I didn't graduate. I mean, it was starting to get, you know, populated, but you know, the value of human connections and networking is like immeasurable. You know, as you start to just think about stuff, you know, I might like this. I should go talk to my professor. I should go talk to, you know, another professor in another department. Just go ask questions. You know, and they'll tell you what they know, and it might help some light bulbs go up, but then help you choose a path forward that may have not been like sort of the plotted path that you had originally, so. That's.
Yeah.
what I think.
Fascinating. I think the students will remember. You remember what our CFO of this university was trained to do? Yeah, she was like a fossil finder. She got trained to be, and then she wound up in finance through a path that nobody could have predicted, right? So what was your path, Steve?
Well, I was, I realized I wasn't going to be good enough to do the professional tennis thing, which is kind of self-actualization process. I just wanted to get into business and have my own business, but I had no money. And so I looked at this industry and I went down that path. But I think that it's interesting talking about people that I have an undergraduate degree in psychology, a master's degree in agriculture, and don't do that. But I remember growing up, there was a professor at the college in our town, and he was an entomologist. He's got a PhD, and he made the comments and he said there were like 15 people in his doctoral program. He and one other person, although one was still in it. Everybody else was doing something else. And that's getting to a pretty advanced level of education. I would think that don't be afraid to take a risk. Don't be afraid of failure. Find out what you're passionate about, and if there's really what you want to do, try to figure out a way that you can make a living doing it. I think a lot of people now, especially your age, they're first off, where do you want to live? You know, and then a lot of people, younger people are finding where they want to live, and then they go figure out, you know, the next phase at that particular chunk.
Yeah, all fascinating. Any questions on that topic? I think I know the answer to this because I've looked for all the shortcuts, but have you found any shortcuts for hard work? You talk about what is sweat equity, Steve, for the benefit of the
Well,
students?
I got paid a salary. It wasn't much for a while, as I said, and then I just went out and just did some work ethic. I mean, you have to be willing to do those things that it was a piece I got. It was the common denominator for success is do the things that unsuccessful people aren't willing to do. And I know in my training class, so we're 15 at the time, after I think 14 months, because all those guarantees ran out, it dropped down to about 4 pretty quick.
Yeah.
And I think just myself and one other person still doing it.
Yeah. No, well, the students are really well. Many of the students have jobs I'm aware of. As you saw, almost all of them play a sport here, which is, I mean, and you played SEC tennis, unbelievable, but they have a good time management deal here going. Yeah.
So being able to communicate and connect with people is huge.
Mhm.
You know?
All right. Did you have any questions on that point, Mackenzie? Or,
I was wondering, so one of the things that we always tell students to do is to go network, and then we kind of got in depth like some of the people. But I was just curious, like, what are the things, those places that you go to network, and what is it physically? Someone walk into the room, what they see you doing in the network.
You're drinking bourbon, aren't you?
Yes. But yeah, I think, you know, it sounds like this very contrived thing when you say, I'm gonna go to network, you know, but at the end of the day, every person you talk to becomes part of your network. Now you can be strategic about it. You know, you can say, hey, I want to get coffee with a professor, or I want to, you know, go hang out at this restaurant and talk to the owner of this restaurant because I'm interested in that business. And I think that's a very valuable thing. But at the end of the day, like, a lot of it can happen with just miscellaneous interactions you have. Now at your age, you know, you're probably not hanging out with people that are my age. Like, so I think you do have to be a little more strategic, because a lot of times that, you know, your peers are at a similar stage of life, you know, getting started in college. And I realize now that some of my networking, which are my friends, it's just because we're all old. It's just because we're all 40 years old and like
You're older.
Yeah.
Exactly. No, it's so I do think you do have to be a little strategic at your age to sort of target you want to network. But what does it look like? It just looks like a good conversation, you know. And I think the key to that is just asking questions. You know, it may not even be. You don't even have to jump right into detailed questions about the business that they're in. You could literally strike a conversation about sports, strike a conversation, because then that basically, it feels less like an interview and more like, hey, we're just friends, like we both like baseball. This guy, he owns a restaurant, he owns a business, but he loves baseball. We talk about baseball, and then, you start to talk about other stuff. So it's like, I think you got to like slow roll it a little in terms of build that relationship. Otherwise, it feels like, very prescriptive, like, asking a job interview to a person. But the other thing, and my wife's better at this than I am, and I'm working on it, is like, if you have that conversation where you feel like you made some progress or got to know someone, if you have their contact information, follow up a week later and say, hey, great to chat with you. I'd love to get coffee again sometime soon, because, it's just like the first time you meet someone, you don't remember it well, but if you meet them 2 times, 3 times, or even get some communication going or friend them on Facebook or whatever it is, like that, they know you then. They start to remember you. They think about you. If they know you're looking for jobs or looking for opportunities, they may shoot you a message or a text. And I think that piece is a very actionable thing. If you have a good conversation, 1 week later or 2 days later, just text to be like, if you have their number, or Facebook message them, say, or whatever, TikTok if they're on, but I don't know, but just like have that follow up quickly and I try to do this too, because it's like, you meet so many people, but the ones that you're like, hey, that could be a useful connection down the road, follow up with a text or with an email and say, great to talk to you. And just try to keep the relationship going, because at the end of the day, you can get 100 cards at a conference, but if you have like 2, 3 good conversations with people that are your real friends, and I say conference, it could be anything. It could be, one of, a university you get together. If you have 1 or 2 conversations that are like, remember, those are the people you should follow up with, because everything else, you haven't made the relationships substantive enough to like keep it going. So yeah, it's sort of all over the place, but like I'm working on this myself, because I'm an engineer by trade. I'm not a great networker, but there is definitely like strategy that you can do to like help keep those relationships warm. So,
back in the day, of course, you have to go through the corporate offices nowadays when you're applying for positions, but I would get resumes all the time. People interested. No one ever followed up. So very, and you got to follow up on stuff like that. And you got all these different companies that have internship programs. If it's something you think you're interested in, try it. A lot about life is figuring out what you don't want.
Yeah, very true. That's a great point. Great point. And so, I would just add, it never ends. Your networking efforts never end. That career fair we had on campus here, I mean, I certainly found opportunities to meet some people that, could be useful to what I'm trying to do here and build a program. So just keep that going. Those are amazing comments to keep in mind as you navigate. All right, so we have a little bit of time left. If it's okay, I'm gonna go into the lightning round. The lightning round, which is a little geeky, but we've done some surveys with students, not in just this class, but in some other classes as well. And I would just like you to either agree or disagree. We're not going to try to put you on the spot too much. Agree or disagree with the following. And then if you have some strong thoughts or directions about Tesla, let's say a $700 billion market cap company, reported earnings last week. We did an exercise in class, and the students know that for Elon Musk to be correct about his company being as big as Apple and Saudi Aramco combined, the stock would have to go up about 7-fold. And students were skeptical, I think, right? Is that fair to say? Does that happen in the next 10 years?
No.
no.
All right. That's good lightning round response. That's why it's called the lightning round. All right. Huh?
Like it's flamethrower.
Yeah, absolutely. Well, who knows? I mean, I think he's clever. He made a colorful comment in the middle of a bad quarter. All right. So the Federal Reserve raising has been cranking up the Fed funds rate. Students know what that is. They predict, I think this is kind of a slam dunk, next week at their next meeting, the Fed will do what? Continue to raise rates, we think 75 basis points, correct? Yep. Pretty much a slam dunk. All right, that rate, the students would also know right now, the interbank lending rate is 3% to 3.25%. The Fed at some point, we hope, is going to stop tightening, stop raising rates at what we now know is called the terminal rate, And we think that number in general is about 5%. Is that correct, or higher or lower?
It's going to have to be higher than the inflation rate.
Mhm.
If inflation comes down to 5%, it's still going to get there.
Okay. Excellent answer, Ben. Okay, that's good. All right, so
One
this
thing I will
is,
say, Alan, with the Fed, this Fed compared to the Fed back in the late 70s when they had all the inflation, they had a stop and go mentality. They put on the gas, pull back, put on. This Fed's not doing that. It's just a constant pressure until they
Yeah.
the inflation curve.
yeah, and these are big increases historically, and even if the last time something like this has happened was well before we've, been paying attention. But all right, so on that point, if we look at the CPI, year-over-year headline CPI, which gets most of the attention, it's not the only barometer for inflation, but in September, that was up 8.2%. It peaked in June at something a little more than, hopefully it peaked a little over 9%. The next reading comes out in early November for October. The students feel like close to 8%. Is that what you, pretty close?
Yeah.
All right. I like it. See the students. I mean, this is lightning. All right. Unemployment rate in September, the most recent reading was 3.5%. In December, by the December number, so just pretty short term, that goes up to 4%. True? Or
I don't like the unemployment number because if you stop looking for work, that that'll count. We look at labor participation rate. So but it's anybody's guess on that.
Okay. All right. So that can you the labor participation rate? What is that, Steve?
As a percentage of the population that's actually participating in working. And so
Right.
labor participation rate is relatively low.
So that's a great read through, right? You can always find a statistic that will support, like a narrative that
Well,
inflation.
Rayleigh says there's lines, damn lines of statistics.
Yeah, that's exactly the way I feel. All right, is inflation going up? I'm sorry, unemployment rate going up or down from here, Ben?
It goes down.
Okay. All right. The Fed might hope it goes up a little bit. All right. Last question. We'll put you on the spot here. So then the NASDAQ composite, this tech heavy index, is down something like 29% this year. After today, maybe 30%. Students were given a couple of choices. We think it's going to end the year right about there. So the last few months of the year, it's going to be flat. The NASDAQ, which is doing worse than almost any other index, like the S&P 500. Does that sound right, or do you have a more pessimistic or optimistic view on the market?
If you look at statistics in the mid-cycle presidential election year, the average drawdown decrease is around 19%. So we hit that easily. But after you reach that bottom, for the following 12 months, the average appreciation is about 25%. So you can see, and it doesn't make any difference who wins the election, but there's some people know if the Republicans come in, they know where they stand. It's going to be very pro-business. So, but it doesn't make a difference. You're going to see appreciation over the last quarter.
All right, Ben, are you a bull or a bear on the stock market? Short term.
I agree. I like the data. I hadn't heard that, the old correlation. I'm hopeful that that's the case.
Well, we're lucky Steve has turned us on to this, and the students, many of them have subscribed to your Bull and Bear piece, and Michael Antonelli, and we went over his Thrive and Survive piece, navigating bear markets. So we even measured where we're
at the Jason Trennert.
Yeah. So if you don't mind explaining who Jason is.
There's a company called Strategas, which is a berry company that we acquired about 6 years ago. And they just came out last week. Again, for the third year in a row, the number one macro economic research firm in the country. And they have just incredible research. They got 50 analysts, but they do a good job. What do you think of it?
I thought it was brilliant. I have the presentation here, which I was going to ask you if I could share with the students. It's Jason is somebody I've known for a while. I was his client in New York when he worked even for ISI at Hyman's firm, and afterwards. So I've always respected him. I think his call on things like he's not afraid to take a contrarian or out, like his call on corporate earnings being a lot lower than people expect, or even the US dollar might maybe not being the reserve currency in the world anymore. I thought it was very good. His themes were, if I got them right, like higher for longer in inflation and a little bit of a deeper downturn than people are generally understanding, some embedded reasons why inflation may stay around for a while. So I like that kind of thought-provoking stuff, all of which is summarized beautifully in this. So I'll share it. But it was nice to see him because I've known him too, and we have a lot of common friends. So I really appreciate the invitation to that was 2 weeks ago. Yeah. All right, let's see in the last minute, is there any last questions, Mackenzie or anybody? This is a group of students that I really feel like, Midway's starting to, well, it has for a long time, but this group of business students, hopefully in the finance program. Go ahead, Zachary.
For, what you guys market or.
Well, so currently, so if you're familiar with the registry, it's a three-tier system. So currently we're in 5 states: Kentucky, Michigan, Texas, Nebraska, and Florida. So those are the locations we market. In terms of the channels we market, we're experimenting with all kinds of things from podcasts, which are influencers, but we try to do a lot of grassroots or bottoms up type organic marketing, like jumping on podcasts, talking about our product, because from a dollar perspective, we can't compete with some of these multinational billion-dollar liquor brands. So we're trying to sort of, just create a good product, talk about it to people that also are into bourbon, and try to find the influencers and people that are just talking about bourbon, other than just traditional targeted ads on Facebook around locations that we're selling in.
Go ahead, Aisha.
What's your alcohol or others?
Well, I think, our craft process, which means, and we're still going to be a craft when we scale, but I think we do everything by hand right now. We load the grain in by hand. We stir it by hand. We disconnect, tri-clamps from all the systems because they're not hardwired in by hand. So it's a lot of care and feeding that goes into the distillation process. And then from there on, a lot of it, I think, is just our team. We put together, well, the team you saw, but that team has lots of different perspectives around product as we develop product, and also their palates as we taste, single barrels and figure out how we're going to blend them, how we're going to age these in secondary age barrels. So the craft and the team are the 2 things that make sense.
It's also from Midway. So a whole team and a lot of heritage. So that's a great note to leave it on. I've got both of your emails on this page. I hope it's okay if the students take to heart some of these networking ideas we had here today in Mackenzie. And we really can't thank you enough. We know how busy your schedules are at an unbelievably busy time of year. So thank you guys. And I'll see everybody on Tuesday. Okay. Ben, I'm sorry. I was going to ask you about this. Some of this stuff here is fascinating, and I'm sorry to give you a chance to talk.
I'm so glad you were.
Yeah, we do a program. Yeah. Partner with the they basically get it. So like, models, we can 40%.